G'day traders, Mindset Reset Tuesday, Free Cash Tuesday. We've had Free Cash Monday, Free Cash Tuesday, but today we're going to be talking about the New York Open, specifically trading the New York Open time window. Not necessarily right at the New York Open, but talking about focusing on that 9:30 time frame. And one of the reasons why is that with traders that are struggling or they're getting caught into first hour moves, getting stopped out, getting frustrated, chasing stuff, and getting stopped out in the process, and then missing a really simple, clean, best trade setup opportunity. Now, tomorrow's Free Cash Wednesday. I want to re-establish the understanding of the opening range and initial balance. That initial opening range sets the high-low for the week. Now, go back, as I've talked about, study your Mondays. Have you broken any previous day's boundaries? Have we broken any weekly boundaries? You may already be in a day it can be inside on some of the more volatile instruments, gold indexes, oil, obviously. Some of the cross-currency pairs sometimes can be large ranges, even though they're inside days. But if a Monday has not broken a boundary, but you've moved several levels, maybe 150 pips, for example, gold and oil inside, because Friday was a large range day, most likely we have other time frame traders in the market. What that means is that, as I've talked about, when you break hourly highs, when you break 4-hour highs, when you break daily highs, weekly levels, you now have all the time frames on board. So coming back to understanding that the opening range sets the high-low for the week, and if you haven't broken any boundaries, it's an inside day. If you have broken boundaries, or you're already in a market that broke out on Friday or Thursday, Friday for a Monday trade, as we saw in some instruments, coming into Wednesday, Monday sets our opening range. Tuesday will either break out of a level or false break a level. As Paul Tudor Jones says, when a market's trying to expand the range, it's giving you clear and loud signals that it may be preparing for a range expansion, meaning that we can get a false break, but we've triggered other time frames into the market, other time frame traders, breakout traders, not a failed breakout. So an excellent question from a trader was, what do I consider more significant, a failed breakout or a false break? Nothing is more significant than anything else. Nothing is more significant. It means nothing to me. When I'm looking at that, though, what it helps me establish is the day count and whether or not I have a best trade setup on an instrument that I'm trading. I can have an inside day that can give me a parabolic opportunity. I can have a market that is broken down inside, as we saw in indexes, and triggered breakout traders today, pumped up 3 levels and rolled over for low-hanging fruit for a parabolic opportunity. We can see a market that's collapsing heading into a session, as we saw in gold, and collapsing for 50 pips without a false break and without a failed breakout. But that collapse now becomes a false break. So nothing is more important than anything else. It's helping me establish my thesis going into a session, though, as to whether or not the instrument that I'm looking at is going to provide an opportunity. And if it doesn't, or if it's not as good as something else, I'm just going to slide it to the left, look at the next chart. I'm always hunting out the cleanest, best, well-engineered template on a chart itself as part of a bigger day 1, day 2, day 3. We saw first green day on the Japanese yen crosses, US yen, pound yen, euro yen, for parabolic day 2 Asia session trend trades that went vertical through to the highs of the week on a couple of the pairs and through the high of Thursday, whatever it was, on one of the other pairs. But they were 50, 75, 100 pip moves. So when we have our opening range and initial balance in a large majority of the cases, that will help us form a box. Now, we're either going to get a parabolic breakout, maybe in Asia or maybe in London for an opening range breakout, a parabolic opportunity in Asia, or on an Asian cross rate, for example. We may get it on any pair if you find the best template. We may get it in London on a pound cross, a euro cross, a Swiss franc cross, and in some cases we may see it on just a US major cross pair, as we can often see in London. Or we may see a 3-session parabolic opportunity in the US after we've got Asia, London, New York. We can have a peak formation high or low of a day that's already established, a 3-level drop or a 3-level rise for a parabolic opportunity either a parabolic trend trade or a parabolic reversal trade. Parabolic trade setups, whether they're low-hanging fruit, whether they're trend continuation trades or trend trades themselves, or reversal trades, are where you make the free cash. Those are the trade setups that are driven by other time frame traders. So once we've established our high-low opening range initial balance, and we have, in a lot of cases, all time frames on board, the reason why those trades go parabolic is because there's a lot of oomph behind driving them, whether it's just for that session, whether it's for the next 3 days heading into Wednesday, Thursday, Friday, free cash Friday. But it's the understanding of a box. Somebody said to me today, what do I expect tomorrow? What do I expect on what? I have no idea what that question means. I don't know how to answer that. There's another 16 hours for markets to set up. All markets. What do I expect? I expect that there's going to be a best trade setup. My job as a trader is to find it. My job is not to try and find something to trade. My job is to find the instruments with the best templates on the day to find a 90-10 opportunity for free cash. And if I can't, I need to step back and maybe let them trade 1 hour, 2 hours, maybe 3 hours before I can recognize something that's a best trade candidate setup. In a large majority of cases, there typically will be 1 or 2 easy to find opportunities, whether they're just low-hanging fruit, session scalp, session parabolic scalps, maybe high day, low day, high day, that sort of scenario. Or we may get a low of week, high of day opportunity, a high of day, low of week opportunity. In some cases, we will get a day 1, day 2, day 3, high of week, low of week, or low of week, high of week opportunity. Now we have CPI on Thursday. So if we have CPI on Thursday, it's very probable that we might find a Tuesday, Wednesday, Thursday setup, meaning a failed breakout might show up on one of the instruments on a day 2 on Tuesday that starts a day count for day 1, day 2, day 3. We may not. We might find that there's an inside day on some of the instruments, and we get a Monday, Tuesday inside day, false break reversal off of an inside day maybe after CPI for a first bounce or a first bar trade. We could get 3 levels of rise for a first bar trade on CPI that traps traders down at the low of the week and gives us a reversal opportunity on Thursday for free cash Thursdays. There are multiple scenarios, but your job as a trader is to step back and allow the market to set up. It is not to try and predict. My job isn't. My job is not to try and predict or forecast or, do all those other things, because there's a lot of things that can establish and set up and be manufactured between now and then by the powers that be that are driving those charts and moving the money and setting up those templates to draw traders into the market. Remember, the goal of markets is to shift the money from the many to the few. It is not for retail traders to try and predict and forecast where they think it's going to go and then catch a move. I'm looking for parabolic opportunities because they are scalable in size, and they're driven largely by other time frame traders. The 2 trades we had, or that I had today, actually there were 3 opportunities that were definitely driven by other time frame traders by the time we got to the US session. Gold for sure, the collapse down from the high of the week to the low of the week. From Monday's reversal into Tuesday, and then the collapse down. That's driven by other time frame traders. It's been fading and collapsing, breaking lower, pulling back, breaking lower, pulling back all day. Oil, broken out market, 3 pushes into the low of the day, a 3rd hour reversal. That's driven by other time frame traders. We're outside of the range. Indexes collapsing down, pumped up 3 levels. New York Open rolls over and goes vertical in most of the pairs, 50 to 100 pips through the lows of the week. I believe it was Friday that had the lows in place on those indexes. But that's the really key thing to understand. Other time frame traders are driving those markets. And so there are huge opportunities when that presents. We saw that on, I believe it was the Japanese yen yesterday. Hourly chart, 15-minute chart, 5-minute chart, 1-minute chart. The DJ30 for an explosive move, first hour. was already locked in. We had 3 pushes down at the low of the session in London, and then a 1 hour engulfment after the first hour. We had a lot of other time frame traders driving that move until we got back to the highs. So huge opportunities, but step back. I reinforced the 9:30 New York Open time because traders are trading all these other times, but they're getting beat up. So I keep saying this, 9:30 New York Open. Why? Because it reduces the variables and allows you to step back and really start to look at which pairs are setting up, because there's a lot that can happen in 90 minutes. Some traders are getting in at, 8:05 and they're catching moves and that, but you're missing the point of what can happen when a market is going to go parabolic or move and not come back for maybe 1 hour, 2 hours, 3 hours. Now we're talking 50, 100, 150 pip moves that don't put any heat into your position. Not these little zigzags and scalps and gaps and all these hunts and all these other things. We're talking about markets that are going to drive in one direction for at least an hour, and allows you to put your profit targets in, take money off, leave a trailer, manage your risk, scale in, scalp, whatever it is, whatever that type of setup is offering you. So focus on the big picture, opening range, initial balance, understand what those are, hunt out the best setups. Don't worry about something being up high or down low. Somebody said to me today on a couple of instruments, oh, they've broken weekly levels, but they're still on the front side. There's no indication of any setup there. Don't get caught into something because it's up high. It's day 2. I'll repeat this one more time before we close out. It's Tuesday. A lot of traders get chopped up on day 2 before we even get to Free Cash Wednesday. Why? Because opening range, initial balance, day 2 sometimes is a day that can chop traders up. They're getting caught down low or caught up high chasing moves, and they get chopped into whipsaw, and the market moves maybe 3rd or 4th hour. But we get to Free Cash Wednesday, there's an easy textbook parabolic opportunity. And we might not even get really a 5-star one until maybe Friday, but it's easy money. Don't get chopped up before you get to the easy money. Like Jim Rogers says, stand back, wait till the money is laying on the floor in the corner, and all you have to do is walk over, bend down, and pick it up. And just don't hurt your back in the process, traders. So Free Cash Wednesdays tomorrow. Have a great day. Keep it simple. 1% better every single day. And may the markets go with you.